Welcome to this deep dive. We're zeroing in today on, well, a really punchy idea in trading.
Mm,
A trader without an edge in trading is only a gambler.
yeah, it's pretty blunt, isn't it?
Yeah.
But it really cuts to the chase, distinguishing between, skill in the markets and just rolling the dice.
Exactly. It sounds simple on the surface,
Yes,
right?
yes.
But our mission here is to really unpack that. What does it actually mean if you're trading? Or maybe just curious about it all?
We want to get into the layers, the sort of practical side of things tucked into that one sentence.
It really highlights a fundamental split, doesn't it?
Totally. Trading, when it's done right, it's about making smart calls based on probabilities.
Right.
Gambling, that's just luck, pure chance. And this edge concept, well, that's the dividing line.
Okay, let's dig into that. This edge. What is it exactly? We're not talking about like secret inside info, are we?
Oh, definitely not. No, a trading edge is something demonstrable, an
Yeah.
advantage that gives you a statistical likelihood of things working out positively over time.
Statistical likelihood.
Yeah, and it can look like different things. It might be a specific strategy, for example, where history shows your average win is bigger than your average loss.
Or you win often enough to make money even with those losses.
Precisely. We call that having a positive expectancy.
Ah, right.
Think of it like a game. Say you win $2 when you're right, but only lose $1 when you're wrong. Play that enough times.
You'd expect to come out ahead. Makes sense.
Exactly.
So it's about having something, well, real, measurable, based on data, analysis, not just a gut feeling.
That's it. In a nutshell, consider a casino. The house always has an edge, right? In almost every game.
Mm-hmm. The rules favor them.
The rules are set up so that over thousands and thousands of bets, the casino is statistically bound to win. A trader.
Yeah.
They need to find or maybe build their own version of that statistical advantage in the market.
Right. And finding that edge, it can't just be luck, can it? I mean, what kind of work goes into developing that advantage?
Good question. It's not random. It takes a pretty deep understanding of how markets actually work.
Like what?
Well, it could involve technical analysis. That's where traders look at price charts, trading volumes.
Looking for patterns.
Exactly, recurring patterns that might hint at where prices are going next. Some traders, for instance, might look for specific chart shapes that historically tend to be followed by a price jump, say 70% of the time.
Okay.
Or it could be fundamental analysis.
Which is looking more at the why.
Right. The underlying value of an asset. You're digging into a company's financials, health, economic trends, what's happening in its industry, that sort of thing.
So a technical trader might see, I don't know, head and shoulders bottom pattern, knows it often leads to a rise, and uses that to time a buy.
Could be, yeah. And if that pattern has reliably led to a price increase more often than not, and critically, they have a plan for taking profits and cutting losses if it fails.
Then that pattern recognition becomes part of their edge.
It could be, yes, a component of it.
And on the fundamental side, maybe someone researches a company, realizes, hey, this looks way undervalued compared to others in its sector, and they invest thinking the market will eventually figure it out.
Yes, exactly. And their edge in that case might be their incredibly thorough research, maybe a unique understanding of that specific company or niche. They see something the wider market hasn't quite grasped yet.
Okay, so then if you don't have this kind of systematic approach, this edge you can point to and say, here's why I expect this to work over time, are you basically just crossing your fingers? Like buying a lottery ticket and hoping?
That really is the core of the statement we started with. Without an edge, trading looks an awful lot like gambling.
Your results are just noise, market swings.
Pretty much, yeah. Largely dictated by unpredictable moves. And over the long haul, the odds just aren't in your favor. You might hit a lucky streak short term.
Like winning a few hands of poker by chance.
Exactly. But without that consistent advantage, sustained success is very unlikely.
Which brings up a really practical point. If someone's new to this, how do they even begin? How do you find or build an edge? It sounds intensive.
It definitely takes work, dedication, and a real commitment to learning.
Where do they start?
Often, new traders start by just learning about different strategies, different ways people approach the market. Technical, fundamental, quantitative.
And then practice.
Yes, practice is key. Maybe using virtual money first paper trading. Or trading very small amounts of real capital to test things out. See what fits their personality, their risk tolerance.
And tracking everything meticulously.
Oh, absolutely crucial. You have to track your results carefully. Look for those patterns of profitability. What's working, what isn't. Why?
It's not just about the wins then.
Not at all. Understanding risk management is just as vital. knowing when to cut your losses, how to size your positions appropriately. That's a massive part of any sustainable edge.
So it's not just picking winners, it's managing the losers effectively and knowing the odds of your whole strategy playing out over hundreds, maybe thousands of trades.
You got it. Risk management is huge. You can have a strategy that wins, say, 80% of the time. Sounds great, right?
Yeah.
But if those 20% losses are absolutely massive, they could wipe out all the wins and then some.
Ouch. Right.
Conversely, you might have a strategy that only wins 40% of the time. But if your wins are, on average, much bigger than your losses, and you keep those losses small,
That could actually be very profitable.
it absolutely can. It's all about that positive expectancy over time.
This really underscores something else too, the need to keep learning, keep adapting. Markets aren't static, right?
Not even close. They're constantly changing, evolving.
Yeah.
What worked brilliantly last year might completely fall apart this year.
So an edge isn't a set it and forget it kind of thing.
Definitely not.
Hmm.
Successful traders are always evaluating, looking at their performance data, analyzing why things worked or didn't, adapting to new conditions,
Always refining.
refining their existing edge, or even looking for entirely new ones as the market landscape shifts.
Okay, so let's sort of pull this all together. That simple line, a trader without an edge is only a gambler. It really packs a punch.
It
It stresses the absolute need for some kind of demonstrable, statistically sound advantage. Doesn't matter if it's technical, fundamental, some mix.
As long as it's backed by analysis and discipline.
Right, and tied together with solid risk management. Without that edge, you're essentially leaving things up to chance.
And chance isn't a strategy for long-term success in trading. It's about moving away from chance towards informed decisions where you understand the probabilities and manage them to your benefit.
This has been really illuminating, getting into the weeds of what seems like such a basic idea.
It's fundamental, really.
So, thinking about all this, it makes you wonder, doesn't it? What do you out there listening think really constitutes a true edge in today's markets? And maybe more importantly, how does someone actually go about developing one or spotting one?
Yeah, that's a great question to ponder.
Definitely food for thought, whether you're deep in the markets already, just thinking about dipping a toe in, or even if you're just fascinated by how these complex systems work, something to reflect on.